This is a way for Europe to actually, in some sense, overtake the US regarding the euro as a worldwide reserve assets. And there, given the customer base of Facebook, which is worldwide, the central banks woke up to the fact that if Libra was going live, the adoption could go really fast and could go worldwide again. The digital euro has the potential to change the monetary system, and we have to seize this opportunity. We shouldn't be shy with the design.
Alex, I don't know about you, but I can't remember the last time I made a payment using cash. I think it was probably months ago to leave a tip at a restaurant or something. To be very honest with you, most of my transactions happen electronically today through bank transfers, by tapping my phone, using my credit card, or just, using PayPal.
Yeah, really same here. I don't carry much cash with me anymore.
And it's a very timely conversation because lately there's been a lot of buzz around the digital euro, the European Central Bank's proposal for a digital currency that, quote unquote, would be an electronic equivalent to cash, complementing banknotes and coins and giving people an additional choice about how to pay. However, since I already carry out all my transactions electronically, it makes me wonder what all this talk about the digital euro really is about. How will a digital euro be different from using an app on my phone to make an instant payment? I simply don't know.
Well, if you ask the European Central Bank, the ECB, the digital euro will apparently bring a lot of benefits. It's free. You can use your digital euro wallet to make payments and receive transfers in digital euros anywhere in the euro area.
They also say it will be secure and private. You could conduct transactions in your local store or just to pay back a friend with your phone or card online and offline without anyone knowing who spent that money on what or who got it. Basically, just like using good old cash.
It also would ensure that payment services, which are indeed essential to daily life, are always available, including in the event of, for instance, big crises like floods, power outages, or earthquakes that could disrupt these traditional payment services.
And also, it would free up the EU from its dependency on non-European, mostly US, payment providers such as Visa and MasterCard.
And the idea is that then this digital euro would be stored in an electronic wallet, which could be set up by your bank or some other private company.
And more importantly, the digital euro would be backed by a public institution, the European Central Bank, which would provide stability and reliability that commercial banks can't give you.
So the ECB believes that it should be relatively straightforward. Citizens would only need to do the following. For instance, set up a digital euro wallet, which is like an app on your phone with your bank or a designated public authority. Could be also like a post office.
Or if you don't have a mobile device, you could get a card, which you could get and then top up at public agencies. Again, like a post office.
And then you can also just wire directly from a linked bank account to the wallet or to the card.
Pam, you have your digital euro and you can go crazy. You can use it for electronic payments in shops, online, or from person to person, wallet to wallet. So the sky's the limit.
Well, I have to stop you a bit because we're still in the implementation phase. The idea has been cooking quite a while at the ECB. So they started in 2020 with a report, and then they launched the whole project in 2021. And currently, they are working on a rule book, so rules, standards, procedures on how this whole thing could work across the euro area, so on payments and protection for users. And they're also conducting some tests, and they're now also thinking about how to selecting providers that could develop the infrastructure on which this whole thing could run.
Okay, fine. I shouldn't get so hyped up, but when can I get my first digital euro in my digital pocket?
Yeah, well, that's actually not really clear. On the ECB website, it says that the Governing Council of the ECB is expected to make a decision October this year, so October 2025, in case somebody listens in 10 years to this episode, to move into the next phase, which is the implementation phase.
And then the actual decision on whether and when to issue the digital euro would only be taken at a later stage, once the EU's legislative proposal is completed. And this refers to the digital euro package, which was proposed by the European Commission in 2023 and is still being debated in the European parliament. So if you're listening to this podcast in 10 years' time, hopefully the legislative proposal will be ready by then.
So don't expect to get your your digital wallets on your digital euro anytime soon.
However, what we can do now is unpack what the digital euro could mean for you, what exactly it would be, how it would work, and whether the hype around the promise of this central bank digital currency is justified or a far-fetched dream.
And to unpack this discussion, we invited Cyril Monet, a professor of economics at the University of Bern.
We started the conversation with him by going back to basics, to understand the very concept of money, currency, the role that banks play in the economy, and how digital currencies could reshape our financial system. And then, of course, we untangled the digital euro proposal.
Well, let's get started.
Oh, yeah, but one last thing before we start. We want to remind you that EU Untangled is an independent podcast by me, Victor Aguilar, and Alexander Roth. It means all opinions that we express in the podcast are solely ours and cannot be attributed to any third party.
Well, now let's get really started.
Let's get digital.
So we are very happy to have Cyril Monet on the podcast. Cyril, welcome to You Untangled.
Thank you for having me. It's a pleasure.
Cyril, you are professor of economics at the University of Bern in Switzerland. You have a PhD in economics from the US, from University of Minnesota, and you also have been working as an economist actually in the European Central Bank. You can match a bit like the policy and the research side, which is, I think, great that you joined for this conversation on the digital euro. And before we go in the details there, I think it would be helpful for our listeners to understand a bit before we talk about the euro in general and also its digital version. What is money? So, and what function does it perform? So to understand later what the digital euro could do
Right
there.
Yeah, and it's actually a very important question, to get the basic right. The reason is that, when you are taught money in the undergrad, usually money is defined as, a unit of account, means to pay, and then a store of value. So this is usually how you define money. But at the same time, when you look at, the history, you realize that, some form of money, they were actually not really means to pay. So what I'm thinking of in particular is, in the island of Yap in Micronesia, what these guys were using were huge stones with a hole in the middle, so a bit like a donut, but it was really huge, right? So these stones must have weighted like tons, and they were using that as what we would call money. But at the same time, this feels a bit weird, right? Because it's too heavy, right, to trade. And actually, what these guys were doing is that they were sinking these stones in the middle of two islands, and these stones were essentially a way to settle debt between islands. Okay, so essentially, this was a way to record who was owning this stone, was the richest, and then whenever you were going to trade with the other island, the ownership of the stone was changing across island. And this doesn't sound like it satisfies the unit of account, and the unit of account maybe, but the store of value and the medium of exchange is a bit tricky, right? And so to me, when I went to and you mentioned I went to the US, to Minnesota for a PhD. Of course, this was the definition of money I had in my mind. And then, I took this course from this guy I didn't know. His name was Narayana Koshalakota, and this was in the late 90s. And, at this time, I took the class, and then I had a eureka moment, so I don't know if you guys had ever a eureka moment, but it's a time where people teach you something, and then you're like, wow, I get it. That's it. And it changes your whole perspective on a specific topic. And this is what Narayana, who became my advisor later on, this is what he did to me. So he essentially had this theory that money, yes, is used as a store of value, yes, as a unit of account, yes, as a means to pay. But this is not what money is. This is what money does. And so he has this paper, which is, I think, path breaking, at least to me, it's called Money is Memory. Okay, so essentially, money is there to keep track of debt and to settle debt. Okay, that's essentially the aspect of the paper of Narayana. There's another very important thing in this paper, Money is Memory, is that money is essentially replacing, and we'll talk about that later, I guess, in his theory, money is replacing a huge database that would record all the transactions that we would do. And absent this database, he shows that with money, like paper money, if you want, you can achieve exactly the same allocation as with this huge database. And so, our listeners should keep that in mind for later reference. So, if you ask me what money is, I'm going to tell you money is memory. So this was, a long story for a short conclusion. And this is not me, right? This is Narayana, just to be sure.
I had never thought of money in that way, but now it makes me wonder, what is the difference, in your opinion, between money and currency? Because then money seems like a much broader concept, whereas currency is what we think of, at least myself as a layman, when I talk about the US dollar or the euro or the Argentinian peso.
So that's an important question. So currency is one form of money. Currency is going to replace this large database. And with currency, you can actually, you trade every day and you can achieve the same allocation as you could with this huge database.
So it seems pertinent to ask you, what is a digital currency today? Because I feel that it's not entirely clear, at least to me, how a digital currency is defined vis-a-vis what I have in my bank account. So when I look at my bank account online, or when I go to an ATM and before I withdraw the physical money, I see numbers there. So to me, that's already digital or at least electronic. But when we talk about digital currencies, I feel that we're talking about something else. Could you help us define what that is?
I'm not sure. I'll try. Because you're right that on your bank account, you already have, digital representation of your wealth or a digital representation of money. And you don't have to actually withdraw at an ATM. You always can, but you don't have to, right? What you can do with some application is like PayPal, if you want, you can already pay with this digital representation of money. Having said that, so, digital and Visa and MasterCard, existed way before Bitcoin and cryptocurrencies. And they are digital forms of money already. However, the way that people think about digital money is more about, crypto and the fact that you can use, your internet and applications linked to your account, to make transfers. While Visa and MasterCard, they existed before this technology. You had this chip on your card. And I get that some people might say, well, this is not digital currency. I would say it is, but you might have some.
Okay. So let me see if I understand. So in your perspective, what I have in my bank account, that these zeros and ones, hopefully more ones than zeros, or the zeros at least to the right. But what I have in my bank account, to you, that's already a kind of digital currency.
Yeah, this is a digital privately issued currency. And that's a big difference with what we're going to talk about, CBDC.
Right.
In the sense that it is a claim on the bank that you have, right? It is bank's debt that you have, right? When you essentially, if you hold a deposit at a bank, it's essentially a loan that you make to the bank, right? And the bank is crediting your account with that. It's not that. So it's money that the bank can create, but at the end of the day, this is yours, right? And so by holding it at the bank, you sort of make a loan to the bank, and that's a digital asset.
What would, in your perspective, be then a difference between me having numbers in my bank account, in my private bank account, and a central bank digital currency?
Yeah, so the big difference that we don't realize, and that's probably because we're not rich enough, is that when you hold a deposit at your bank, again, it's a debt of the bank. And if the bank defaults or goes bankrupt, like Credit Suisse, Credit Suisse was a large bank. Everybody would have thought 10 years ago that Credit Suisse would never default. Well, Credit Suisse defaulted, right? So for those unlucky depositors who were holding deposits at Credit Suisse, well, there was the risk that they would lose all their money, right? And that's the big difference with CBDC. If you hold the CBDC, this is a claim on the central bank directly. There's no intermediary. Because there's no intermediary, we would expect that a central bank being able to print money at will never default. And so there's no default risk if you hold the CBDC. If you hold for bank deposit, there is a risk that the bank defaults. For us, it's probably not important because we're not rich enough. right? So there is this deposit insurance that, personally, I'm not above the deposit insurance limit. So this means that all my deposits are insured. But for even small firms, they might have cash flows at their banks, and this cash flow might be way above the deposit insurance limit. And for these guys, it's important that, whether they're going to hold their deposits with the bank or into a CBDC. In some sense, a CBDC exists, right? It's called reserves. The problem is that only banks have access to reserves. We do not have access to reserves as private individuals. You have to be a bank, to have access to reserves. And the idea of CBDC is that we would essentially all have an account with the central bank, and we could deposit our money, wealth with the central bank.
So is a CBDC, so a central bank digital currency, is it a way to give individual citizens access to public money that today we don't have access to?
Exactly. It's a way to give access to public digital money that does not exist at the moment.
Mm-hmm.
The public digital money exists, it's reserves, but we do not have access to it.
Because we're not banks.
Because we're not banks, exactly.
Okay. I'm trying to wrap my head around it, and I think I'm starting to get the gist of it. But perhaps something that could help me even more is if we were to talk about any examples of central bank digital currencies already functioning around the world. I don't know if that's the case.
So there are two cases that I know of. The first one is the Send dollar, which was issued by the Central Bank of the Bahamas. And this seems to work well, but this is a very small country, right? So when you are like the ECB, maybe you don't want to use the Bahamas as an example.
Mm.
The other country that issued a CBDC, and that is more important, is China. Okay, they issued the digital yuan, and they say that this is still in the test phase. At the same time, they already issued millions of wallets where people could store their wealth. The thing is that nobody does in China. So the way that they deployed the wallets is essentially they gave an incentive for Chinese to download the app. And the incentive was essentially that you had, some digital yuan free for you whenever you went downloading the app. So a lot of people downloaded the app, but then they spent the amount that came with the wallet, okay, with the app,
mm-hmm.
and then they never used it again.
So wait, the app came already loaded with some digital money.
Yeah, to give you an incentive
for the Chinese people. They spend it to use it.
Exactly.
But then once they spend it, they never topped it up again.
Exactly.
Why did that happen?
What people say is that Alipay and WeChat Pay, they already offer very attractive means to pay because they are linked to their money market fund. And so essentially, the digital yuan does not pay any interest, while holding your money into a money market fund linked to Alipay earns you some interest. So it's much more attractive.
So is it in a way that the Chinese didn't see a practical use case for the digital yuan?
Exactly. And financially, it doesn't seem to be very interesting.
Attractive enough.
Right.
When did China launch their yuan? And I'm talking about them because compared to the Bahamas, I guess it's a more relevant example at the global level because it's a bigger economy.
Well, I don't remember the exact date, but it's like 6 years ago.
Mm-hmm. And they still haven't managed to make it work in the way they intended.
Right, exactly.
Very interesting.
Maybe it's now a good moment to look a bit into the digital euro, which is the name of the European Central Bank's initiative to start its own central bank digital currency, CBDC. What they want to do is, I think we're quoting from the website, a digital form of cash issued by the central bank. So basically what you also have said before, we all citizens can access central bank money. Can you tell us a bit about this initiative? Maybe also a bit of background, why they're doing this? Also, why now and not 10 years before already? And is there any urgency to it, or what's the motivation of the ECB?
Right.
Especially, I would add, knowing that it didn't work in China. So China tried, China failed. Why are we going to try now in Europe?
So Bitcoin was there in like 2009, 2010. I think the white paper of Satoshi Nakamoto came out in even 2008. And central banks at the time, they were looking at Bitcoin and they were saying, Bitcoin technology might be interesting, but it's not used as money. It's way too volatile. We shouldn't be afraid of Bitcoin. Fine. So there were no real interest in issuing a digital currency as a response to the threat that Bitcoin might represent. But in 2019, you might recall that Facebook in June or July announced or issued a white paper called Libra.
Mm.
And this was really a wake-up call for central banks, especially for central banks in developed, in advanced economies.
And why, Cyril? Why did they view this as a threat, Libra or Bitcoin?
So Libra was essentially announced as a consortium of commercial banks. Also, Visa, MasterCard was part of Libra and so on. And what Libra was supposed to be was essentially a stable coin. So essentially a new form of money that would be backed by deposits held with these banks. And these new forms of money could actually be traded everywhere in the world because it would be recorded on a decentralized blockchain.
Right. And as a stable coin, as the name suggests, it would be more stable than a volatile digital asset like Bitcoin.
Exactly. And there, given the customer base of Facebook, which is worldwide, the central banks woke up to the fact that if Libra was going live, the adoption could go really fast and could go worldwide again. And so then you have to wonder, if we have this new currency, this new means to pay, it's not a currency, it's a digital means to pay, that everybody can access, what is going to happen to the demand for, Swiss franc, the demand for dollars, especially for remittances, for instance. So remittances, they are transfers of wealth from workers, right? So, I'm working in Switzerland. I want to make a transfer every month to my family in France. Then, this is going to count as remittances.
Mm-hmm.
Remittances are very expensive to make at the moment because you have to go through the banking system. With Libra, I can just transfer Libra. That's going to be almost instantaneous. The cost is going to just be the mining cost that I would incur because it's on the blockchain, but otherwise it's going to be seamless and it's very cheap. Then I don't need to have these, Swiss franc, dollars, whatever, euros. And so at this time, the central banks were like, wow, are we going to lose our unit of account? Right? Because if people start using Libra to make remittances, maybe they're going to use Libra even when they make purchases within the country.
What would happen in this hypothetical scenario where everybody adopts Libra and very few people keep using the euro or the dollar or the Swiss franc? What are the consequences for those countries?
Yeah, so you don't control the money supply anymore, right? First off. And how do you implement monetary policy? So maybe it's possible, right? But these are questions that came to the mind of central bankers at the time, right away. And then they said, we have to make sure that we have an instrument that can compete with this type of stable coins. And so this is when they started really thinking hard about central bank digital currency.
So in a way, what triggered the whole discussion that now we're hearing more and more often in newspapers is what triggered about the digital euro is that then central banks felt threatened by the rise of other digital assets created privately.
Yeah, exactly.
Because then that would attract the customer base of, well, maybe we're not customers, but that would attract basically the, in a way, investments of private citizens. So then the means of payment and also the actual asset with which it would be paid wouldn't be in the hands of governments anymore, but in the hands of private organizations fully.
And for the central bank, it's a big, to lose the unit of account, for instance, is a big deal. They really want to have control over the unit of account.
At the same time, when I read about the digital euro, or at least the proposal of the European Central Bank to create one, they also highlight a number of benefits. So it's not only about saving the euro as such, but also about giving citizens some benefits. So they highlight that it's free of charge, that it will operate in the entire euro area, that it can be used for any kinds of payments, online and offline. Can you tell us about these benefits? Is it also something that we as regular citizens can benefit from?
So this is a great question because this is at the heart of the design of the digital euro and what you want to make out of the digital euro. And this is where, not being at the central bank, I will strongly disagree with the proposed design that this ECB has in mind at the moment. So there are advantages of having a digital euro. Now, you might question whether you can achieve these results with other means.
What are some of the advantages that come to you?
People have said, well, a digital euro is great because if you remunerate balances on the digital euro, it's going to force banks to actually increase interest rate on deposits, to retain, funding. And this is good because we think that, banks are sort of exploiting their monopolistic power on the deposit side. It's well known that, as households, we don't change banks, every year. We don't actually, most of us never change bank, right? And so banks know that. So what do? They exploit their position and they don't remunerate our deposits. A digital euro that remunerate deposits would force banks to also increase the interest rate they pay to us on deposits. So this is an advantage for us. There's of course another way to do that, right? If you think there is a problem of competition, you can regulate banks and you can say, well, the bank deposits have to be remunerated at least at the remuneration rate that the ECB pays to reserves that banks hold, right? For instance, so you don't need the digital euro in order to force banks to remunerate deposits. But the digital euro would have this aspect. Having said that, the design at the moment that the ECB is thinking of is to have zero interest rate on the holding you would have of digital euro, right? So if you hold 100 euros in your digital euro wallet, then you won't get any interest rate on that. Okay, so it's going to be really a form of cash.
Why does the European Central Bank not want any interest on the digital euro that they are designing?
So they don't. So let me go through another design feature that they are proposing. It's that they are thinking of having limits on the amount that you will be able to hold in terms of digital euro. So the figure is not yet set, but the last time I heard, they were thinking of 3,000 euros would be the holding limit in terms of digital euro. Right? So on your app, your digital euro app, you wouldn't be able to hold more than 3,000 euros. And on these 3,000 euros, you wouldn't be able to get an interest. And these features are put in place because there is a big fear that the digital euro might, what they call disintermediate banks, in the sense that they fear that a lot of us will take our bank deposits and shift it to the digital euro. My, big picture view on this is that there is an historical implicit agreement between central banks around the world and their commercial banks that they deal with. The clients of the ECB are the commercial banks. The implicit agreement is that the ECB is not going to compete with commercial banks. But by providing a digital euro, they are starting to compete, right? And so there is an unease here, in the sense that they sort of start breaking this implicit historical agreement between these, central banks and commercial banks, because they are offering a product that potentially could be much better than bank deposits.
I see. So then,
and they don't want that.
And that's why the European Central Bank, in its initial proposal, already suggests having a limit on the amount of digital euros that any European could hold in their digital wallet.
Exactly. Exactly. But this is going to limit, of course, the competition value that we get from the digital euro relative to bank deposits. Another advantage of the digital euro, but this is more at the macro level, is that if the digital euro would pay an interest, then the monetary policy would be way more direct, right? Because now the monetary policy transmission mechanism goes through the banking system and then trickle down, through some difficult channel to grasp, trickles down to the real economy. But if you pay an interest rate on your digital euro, then this interest rate is going to affect us directly. There's no more channels of transmission. It's going to be a direct impact on our savings. So the bottom line, I think, is that there's many macro advantage of the digital euro. At the same time, the way it's designed at the moment, there is not much use case for us as individuals to use the digital euro. And so we might end up in the same situation as China, where the digital euro is there, nobody uses it, and that's it.
I believe that the ECB probably has the same discussion as we were having probably already a while ago. And they also argue it will be a way to transfer very easily money from A to B, also in a private way. You said it in the beginning that a central bank digital currency is also maybe more trusted than sending money between banks. You don't believe that this is enough for citizens then to use that digital euro once we have it?
This is an interesting angle. It might be that privacy is going to be important for citizens to use the digital euro. The question is that at the moment, we see actually that there is sort of a dissonance between what people say and what people do, in the sense that they don't seem to be very concerned about their data when they go online. As you correctly point out, the digital euro will have privacy features, at least anonymity. Nobody will be able to observe, and the central bank will not be able to observe what you do with the digital euro. What I question is whether it's going to be sufficient to have a broad acceptance and a broad usage of the digital euro, given that we're limited to 3,000 euro. And one thing that I think is very important to know, the latest feature that I heard of is that the merchants, when you pay with the digital euro, are going to be subject to a zero holding limit. Think of that. The merchants, they have zero holding limits when they are paid with the digital euro. What does that mean? It means that if you pay a merchant with the digital euro, the digital euro that you pay is essentially going to go immediately to the bank account of the merchant. Okay? That's what it means. So the bank is still going to be able to observe all the transactions that the merchant does. The merchant will not have privacy at all with the digital euro. Only us as citizens, we will have privacy.
Because for merchants, banks will continue to be involved in those transactions.
Exactly, as they are at the moment. Because the merchants have a zero holding limit, would have a zero holding limit. Now, hopefully, the ECB is rethinking these limits, and we'll see what they adopt. But actually, it's not the ECB; it's going to be the Commission that has to decide at the end of the day.
There is also this argument that the digital euro could bring an additional degree of autonomy and security. Autonomy to Europe, because right now we're over-reliant on foreign retail payment systems. So there is this figure that has been quoted around that a majority of member states actually have to rely on international card schemes for card payments. So 13 out of 20 countries in the Eurozone. With the digital euro, then they would have a common payment scheme. And then there is also the argument about security, because the digital euro would always enable a way to pay. So even in the event of a crisis, like a quake or maybe a digital outage, then citizens will still be able to use the offline feature to access their money and be able to move it around. Does that have an appeal? Is that realistic?
Yeah, it's definitely realistic. As we've seen with the election of Trump, you cannot rely on the US anymore to be our friend, right? To speak simply. And I think Europe has to think how to become less dependent on the US industries and the US government at the end of the day. So I think these are very important issues. The problem is that these are macro issues that citizens as users, they are not going to internalize. Having said that, I think it's going to be important to have a digital euro that you could access as soon as there is an issue, right? So it might not be used. It's not because it's not used that it's not useful. You see what I mean? So it's a bit like the atomic bomb. The atomic bomb, hopefully we don't use it, but it's going to be useful because you can use it as a threat, right? But hopefully we don't use it.
But then it sounds like, I like what you said, the digital euro is a useful concept and could potentially be a very useful tool, but we're still missing real life use cases for the regular citizen to ensure that it's adopted.
Yeah, exactly. And that's why the design, the way they're thinking about it now, is not the best design, because there is no use case for us when we consider what Visa and MasterCard or Apple Pay they offer, in the sense that they offer much higher limits. With a debit card, for instance, as a buyer, you don't pay for these transactions. You actually get paid whenever you use your card. So you have the incentive to use these cards. And also what the ECB is thinking of, which I think is going to be a bit weird is that the deployment of the digital euro should be done via banks. Okay, so essentially the banks will be in charge of deploying the digital euro. But what do you think will happen? They have no incentive at all to sell you this product.
Because the European Central Bank is now a competitor.
Exactly. And they know that if they sell you the digital euro, well, you might transfer some of your funds to the digital euro. For them, it's expensive because they have to replenish these funds that they just lost.
To summarize a bit, I think the last minutes, I have the feeling that you have a lot of sympathies for the digital euro. Having this piece here in front of me from 2023, which has this nice title, Why the Digital Euro Might Be Dead on Arrival. And I think you highlighted the arguments now in the last minutes. You also highlight a lot of good points there. I feel a bit like the discussion is private utility for the citizens versus societal utility. And you see that there's a lot of societal utility, but the private utility is indeed limited at the moment, at least. Yeah, this also, I think, reflects a bit the discussion we had, Victor and I, before the episode, because we were both like a bit like, why do we need it?
I think I haven't touched a banknote in at least a year. So I'm wondering why would I need a digital euro if everything I do already happens digitally? And of course, following this conversation with you, Cyril, now I understand better why it could be very important, but I still don't see how I would just transfer what I own or what I think I own in my bank account to a digital euro wallet.
Right. Again, this is an important point because there is a macro benefit of having the digital euro. Again, the digital euro has the potential to change the monetary system in a good way. The problem is that we need the right design and we need that citizens internalize these macro benefits. And how do you do that? Well, you have to induce them to adopt the digital euro. And how do you do that? You pay an interest on balances or you make a transfer every month. This is not in the books, but this is the way that that citizens would internalize the macro benefits that you get from the digital euro. Just to shift a little bit from continent, the discussion on the digital dollar has been killed by Trump. Okay, so Trump in January issued an executive order saying that any discussion about the digital dollar essentially is forbidden. And then you had this genius act where he pushed stable coins in US dollars. Here, I think Europe has to think how to respond to that. Okay, do we want to push a digital euro or do we want to push a stable coin backed by euro assets? Do we want this digital euro to be wholesale in the sense that it's going to be used to settle financial transactions, or do we want it to be retail? And I think we're at a crossroad. The problem with the stable coins backed by US assets is again going to be that you have to trust that the stable coin is holding the right amount of assets that they promise to hold. If you issue a digital euro, a wholesale digital euro used to settle financial transactions, or a retail euro, but with infinite limits, this would be the same essentially. This is a claim on the central bank. This is a much more secure means to settle. This is a way for Europe to actually, in some sense, overtake the US regarding the euro as a worldwide reserve assets. That's a chance that I think the ECB and Europe should take. This is again, that's going to be a political decision at the Commission, not an ECB decision.
I'm just wondering, since you mentioned several times the holding limits, I'd want quickly to come back to it, but you don't see the risk that we are all moving our money there and then indeed the banks are without the money? Is that not something you see as a risk at all?
No, not at all. In the sense that the banks can change their business model to rely less on deposits. Okay, they could issue long-term bonds to fund their operation. My colleague in Bern, Dr. Niepold, has a paper where he shows that you could actually have the central bank replacing these deposits. How? Well, essentially, the central banks would lend to commercial banks the deposits who flew to the digital euro. And this wouldn't change the allocation at all. I mean, it raises the question of how do you want banks to operate?
But it would indeed probably change the system quite a bit, no?
For the better, if you ask me.
I see why the European Central Bank probably is hesitant to do that, and probably politically could also be difficult to push for, because the bank associations, they will not be happy to hear that. So they need to change a lot of internal processes and business models and that stuff.
So this goes back to my point about the historical agreement between the central bank and the commercial bank. This agreement is that the central bank provides cheap funding for commercial banks, but otherwise does not intervene. Don't change the business model. Just provide us with too big to fail guarantee so that our deposits are super cheap and we'll do the rest. And that's essentially the agreement between the central banks and the commercial banks. And the digital euro has the potential to change that. But central banks don't want that. So they want to make it as unappealing as possible.
So it sounds to me, if we talk about the digital euro on its own, it's almost as if we're expecting it to be a magical wand, but on its own, it won't be. It needs to be also accompanied by an entire rethinking of the framework in which the digital euro would operate. So the rules around it. And I think already a couple of years ago in 2020, a bit longer, 2021, the European Commission also proposed this digital euro package. So a set of regulations around what the issuance of the digital euro, which would be the competence of the European Central Bank, would be. Is there anything in there, Cyril, that you're aware of that could point in the right direction in what you consider the digital euro could be as an actual public good?
I haven't gone through the details of this package, and so I cannot really comment on that. But I think what you said is again important, is that here you have the opportunity again to change the monetary system. This is a time to essentially sit down and rethink how we want the financial system to function. So if this is what this rule book is doing, great. Here we have an opportunity, right? But usually, unfortunately, we need a financial crisis to sit down and rethink the financial system. This is what happened after, the great financial crisis. We regulated banks way more. Now we are undoing this regulation, right? Because we forgot about the financial crisis. But I think there's more to it. Even the banking business model. But we're not taking this opportunity at the moment because, as Alexander sort of pointed out, it's too far-reaching. And central banks are moving small step by small steps. Having said that, maybe we need to have a very simple form of the digital euro that's going to be accepted by commercial banks. Once it's accepted by commercial banks, people use it a little bit, and then we can start tweaking it because it's there. So this should be one way to go.
And I think it was one of your namesakes who said that Europe will be forged in crisis. So Jean Monnet at some point mentioned that, and we would hope that we don't need to have history repeat itself to learn from that, and that we can actually take action, with foresight and do things better. But just in general, Cyril, I wonder if you see a future for cash. We've been talking about digital means of payment, but it is true what I said earlier. I haven't held a banknote or actually conducted transactions with coins in a very long time. Do we still need cash?
I think cash might be useful to discipline the government when you have the digital euro. And when I mean government, I don't mean the central bank, I mean the government. One thing that I am a bit concerned about with the digital euro is that depending on the government that gets elected, the government might have the temptation to program the digital euro so that we cannot spend it on some items, right? So if you have a very paternalistic government, the government might say, no more cigarettes. You cannot purchase cigarettes anymore with the digital euro, or other items, right? Of course. So that's why the ECB is making a big deal about the digital euro not being programmable. Down the road, we don't know what will happen, right? So I think it's going to be important to retain cash so that in case we have this very paternalistic government that we don't like, we can return to cash. So in that sense, I think retaining cash is important. Now, will people use cash? I doubt it.
Is there anything else maybe you want to add at the end of the discussion? Maybe something we have not touched upon that you might find interesting for our listeners as a takeaway, or just something you find relevant?
As a conclusion, I would say that the digital euro has the potential to change the monetary system, and we have to seize this opportunity. We shouldn't be shy with the design. That would be my takeaway for the listeners. And thank you again for having me. It was a great discussion.
Thank you.
Thank you, Cyril. It was fascinating to learn from you. So we appreciate your availability and also all the thoughts that you put into this conversation.
Thank you.
That was our conversation with Cyril Monnet on the digital euro.
If you enjoyed the episode, please consider leaving a rating or a review on Spotify or Apple Podcasts. Seriously, do it. And if you already did, tell your friends to do the same. Really.
Yeah, it would be really nice. What also would be nice is if you follow us on Instagram, LinkedIn, Blue Sky, or some other social media platform to stay updated on future episodes and behind-the-scenes content.
And you know that we'd love to hear from you, whether it's feedback on this episode, ideas for future topics, or just a hello. Send us an email at mail@untangled-podcast.eu.
Yeah, Vic would be really happy to get a nice email from you.
I seriously would.
So to make him happy, please send an email. And thanks for listening. And until next time.
Please help put a smile on my face. Bye.